Good morning. Good morning. I recently got a comment from YouTube that popped up that said, "Where have you been? Can we get an update on the portfolio?" And as you guys know, I this is kind of just made this YouTube channel as a hobby to kind of share the journey and see where I go over time. But the commenter was right, so thanks for holding me accountable here and getting you guys an update. I have made some changes, and most importantly, the SCHD and there's a few other slight changes in trades, but not too much has changed. We've seen some good growth year to date. We're pretty much flat. You can because we had a pullback over the last month, as most of you have probably noticed. And I've been buying, so and I will continue to buy if we go down. And that's just kind of what you do when you're investing long term. Uh, Time in the market is better than timing the market. I think that's the old saying, right? Um, but yeah, all time we can take a look at this. I don't have that much data here because I recently, when Robinhood started coming out with some deals, is when I started bringing money over here to get the APY and the interest and the cash sitting there because it was just easier. And there was a big bonus for bringing stuff over. So that's why we're back on Robinhood. But you can see we're up 12% all time since we've been here, up 11% in the past year. And I think the last report, the total profit for the portfolio was at 100,000, and we're up to 61,000 now. So we've had some good gain, and the portfolio is growing. Some of this is interest, some of this is dividends, as you can see, 82,000. Some of it is options. I don't know how good this is at tracking options I'm trading. As you can see, I've been open options since we last had a video, and I sell some puts and have been growing a position on this pullback here. I'm currently down a little bit. You can see my average entry price is $50 a share, or $51 a share. A good chunk of these I picked up from selling puts, claiming or collecting the premium, and if when it came down to the strike price, I bought the shares, and I was completely okay with that, and I'm continuing to do that. I'm not selling covered calls against them because I don't want it to get called away. I know in previous videos I've talked about Bitcoin and why I believe in it and having it as a good portion of your portfolio. So I'm currently up to 2%, which I'm good with, and this is probably where I'll hold. If we get a drawdown of 10% or more on this position, I'll start adding again. But in this range, I'm good. Just building a long-term position in this to have in the portfolio. Before I go on and go into the portfolio anymore, I want to just say just about every video someone's asked, what is this tracker? It's Snowball Analytics. The first link in the description down below, you can check it out. There's a free version, there's a paid version. I have an affiliate link. It helps me support the videos if you want to use it or not. But yeah, it's down there. But we'll go into, I think that this is the best $10 or $15 you can spend a month if you're serious about tracking your portfolio, because like anything else, if you invest in it, it keeps you coming back. It gives you the growth. It gives you the IRR and your actually total returns. So some people track stuff and you have to calculate all these total returns in a spreadsheet and stuff. You don't have to do that here. It does it for you, which, I mean, this connects to Robinhood and a bunch of other brokerages automatically. You can just sync it. I don't know. Use it or don't, but I think it's amazing. Shout out to Snowball Analytics devs. They've actually helped me with other stuff. But I'll stop the rant. We'll go into exactly what we have here. So SCHD, you can see I'm up to 22% of the portfolio, which I think that's like a 20%ish is a good spot. I've been growing these. I have drip on everything right now, except for two or three stocks, and I'll go into those and why I don't. But yeah, so basically this is my core right now. My core is SCHD, SBY, VTI, JEPQ, and JEPI. So this is my core. I've been shifting from some of the higher dividends. You can see, I think last time I was up closer to 88 or 100,000 a month. And I don't need that much income right now. So, plus, yeah, basically, I don't need it. And it's kind of like slowing my growth. The more I've thought about how I want to structure my portfolio, is I don't need 67,000 or 100,000 right now. I mean, this is nice. I want that, but I'm not drawing it out. So having this too high is actually a tax detrimental because I have other income. Um, but some of it I like because I want it to drip and keep adding if that makes sense. So these all drip and add every month and will grow. And you can see the IRR is pretty decent on these. Like Jeppy is kind of low, but this is good. So, but it's more of I could just be sitting in SPY, right? Or VTI, but I'm planning to retire, partially retire soon. So I'm growing these positions and kind of getting, I want the data more than anything else, even though I can get it on a different site. Many of you probably know just like seeing it and having it in your portfolio and the power of that, seeing, hey, how is this performing? Like, this is actually my data. I can see how it performs and that. So, yeah, I might be losing a little growth, but the experience and the actual being able to see that this is what's happening to my money is more powerful than anything else, in my opinion. So I get to see what's happening there. May that be the best decision? You could argue that, but and I would love to have stuff in the comments about that because I'm sure it would be interesting. But yeah, then we have YMAX. This is a next year or two. YMAX, I've kind of I like it because it pulls. We're having decent. I don't know what the IRR here, but from a profit perspective, even I think all these dividends have been reinvested. Pretty sure, yeah. We're making profits. The current value is down, but you can see we've made 16,000 in dividends, even though we're negative 6,000. So over about the past year or however long we've had this position, this is up a good deal. So let's see if we've had it a year. Looks like we've had it more than a year. Yeah, so you can see the dividends are going in every month, and I'm growing this position, and everything in tech has been pulling back. So this makes sense because with the holdings on this, it makes sense. You know what I mean? So I'm gonna continue for now to just let this DCA or drip in, and this is kind of like my near term income generator. So I'm okay with that. I'm growing it so I don't have loss, you know what I mean? So it's not eroding away the share price and stuff like that because the share price is down. But yeah, this is paying $20,000 a year off of this. So once I decide to start taking some money short term, my thought was I'll use these slightly higher dividend yield. I mean, this is pretty high, 55, to kind of fund my near term partial like income that I pull from this. VNQ, this is a staple for real estate for me. It's been doing pretty good. Oh, as many of you know, has been having a pullback, but I'm just dripping into this and holding. DGRO is another one that I've liked that is a growth ETF. So this is, I have like a core position in this, DCAing in or dripping into it. XDTE is a newer one, but this is doing okay actually also. Um, Even with the pullback, you can see the pullback on the 0 day, but now it's climbing up. So now that we've seen a pretty decent pullback, it'll be interesting to see what this does for the data because it's a rather newer fund and it pays out weekly, I think. So this and QDTE. QDTE has been affected even more, right? Because the NQ has had a bigger pullback. EEM, this is a newer position that I'm starting for the emerging markets, and it's doing quite well. And yeah, this is about where I'm going to hold this at 1%, and we're just going to let it drip. CONY I still have, and this is taking a beating, but still is up 27%. So even though CONY is taking a major beating, it's up 27%. This is different. This one I do not drip. I collect the dividends and then I buy, add some on dips if I want to, but I'm not really looking to grow this position that much more. This is more of a longer term hold, and I'm claiming, just claim, as stuff comes in, right? But I added, I think, $500 on here. If you go into the shares, I added $500. The last time I've added was September. So yeah, we just added $500 more shares here, and you can see, I mean, it's having a major pullback. Coin itself is having a major pullback, so not too concerned. This is a new position, Polaris. I've been growing. I got assigned some options, and it's just been taking a beating. It does have a pretty decent dividend, and it's a company I like for outdoors. They make motorcycles, ATVs, snowmobiles. I'm not suggesting this. This is just a personal stock pick that I made, and obviously you can see it was not a good one. And this is what happens when you pick stocks instead of ETFs. But I will say the reason I started going in is the last big pullback this has had was in during COVID, and it found support right around here. So yeah, you can see I recently added a bit more, 11 units. So yeah, the next support is down here at 35, which is a ways away. So I'm kind of watching it, and yeah, this was something I picked up as a long-term hold. As you can see, this difference is here, but I think with the this is like a tariff situation, because probably like a lot of their parts are made in a different country. So, but it is a Minnesota-based company. So I'm watching this. Not recommend. I won't go into any more. And then some smaller positions down here. These are not even notable. So yeah, SCHD is still my core. I have a little CONY. I have a little XDTE, and that's where we're at. I'm really happy with this. And you can see I still have a pretty large cash position here, 28%. Even though I've been adding significantly, I would say, over the past month, I've put in a couple tens of thousands into some positions. As I said in some earlier videos, I still keep 20 to 30% in cash just in case there is a crazy pullback. You get interest on it. In whatever brokerage you're in. I'm not just Robinhood, but yeah, that's like a security blanket for me. I know not everyone does that, and it affects my growth and stuff, but hey, peace of mind is sometimes better, you know what I mean? But hope you guys enjoyed my rant, and yeah, subscribe if you're not subscribed already, I guess, and I'll try to make the next video come up a bit sooner. And yeah, but yeah, we'll see you in the next one. Thanks for watching.